I think just from what I've seen in and around Moscow, carefully deployed into the middle residential market, I think that the scale of what is happening on the residential side and the relatively unleveraged nature of most of the middle class means that over time is going to be a very interesting thing, unless they do something like move the capital, which they keep talking about.
Okay, good. Nigel, you'll need a microphone though.
Okay. The first thing I would do is ask you to sign a confidentiality agreement, because I don't want anyone in Russia thinking I've got $1 billion to spend. There's no doubt that as soon as you're seen to have deep pockets, prices move very quickly against you. I think I've already said we're big flag carriers for the regions, retail, residential. I agree. I wouldn't say I'm negative on logistics. We have 2 sites for logistics, but it's not coincidence that the last things in our portfolio that we brought forward. I think logistics tends to be a follower rather than a leader. So yeah, regional cities, retail, residential. Not interested really in Moscow at all, other than on a purely opportunistic basis. If Colliers offers something cheap, we'll take it, but I don't think it's there.
Okay, good. Nikolay.
I have 2 answers, official and easy. Official answer is that as consultant, we would recommend to invest 50% in developments and 50% in cash flow, 50% in Moscow and 50% in regions, and 50% in the commercial, 50% in residential. But the easy answer is that, as I mentioned, we have 2 great cases with Metropolis, with Galleria, and it's easy case to get 1 billion from $500 million investment. So just find in mid-class retail, great site, or few sites, probably Moscow, St. Peter regional cities. Probably not such St. Peter's, it's loaded already, but Moscow regional cities, and with a prime location. And then just develop an amazing shopping center and sell it to Morgan Stanley. They are ready to buy already.
Very good. As easy as that, Timothy.
Yeah. I'm afraid we can't buy residential because that's really only a development play, and that's not an investment play, as it's sale to owner-occupiers as we go along. So we're not going to go into residential. I think we're going to go 50% regional retail, development, and buying. There's great value in standing assets at the moment, and then 50% Moscow offices, 25% into selective development, and 25% into standing offices.
Okay, good, thank you. Gordon.
I'm last.
You're last, yeah. So
we would be doing it. We would be doing it to generate returns. So I would take risk in a measured way. I'll repeat some of the things that were said. We do like regional retail, and I think that while a lot has been developed and not developed well, I think there are opportunities to, bring a 3rd generation shopping center that's appropriately sized to the market. But we'd be doing it on the development side and partnering maybe with Nigel. And the other thing that I'd like, I don't know if it's deliverable, but to keep it simple, is with a lot of the restrictions that have been put in place, and some people say they could evaporate, but the development restrictions within the 3rd Ring Road and where the Moscow mayor has kind of tried to control traffic and do other things, I think to the extent that you could buy standing assets and reposition them in an economic way in the office sector, I haven't seen too many of them, but I'd be hunting hard for them if I could.
great, thank you very much. Thank you very much, and thank you to a really interesting panel. Thank you.